China presses Iran against resuming war, urges Hormuz reopening ahead of Trump-Xi summit. The leverage shift starts now. Here is the signal that separates noise from actionable change. We will map trigger, incentive shift, and downstream impact before the close. At the same time, Beijing is pushing hard to reopen the Strait of Hormuz, the choke point through which 21% of global oil passes every single day. Why does this matter? Because the next 2 weeks determine whether energy markets stay stable or spike. And energy spikes hit AI infrastructure costs directly. Here's the context. Iran and Israel have been in an escalating cycle for months. Every attack triggers a counterattack. Every counterattack raises the risk that one side miscalculates and closes Hormuz, either through direct military action or through insurance and shipping companies refusing to transit the strait. When that happens, oil prices don't just go up. They become volatile. Uncertainty premiums spike. And every data center, every GPU cluster, every compute-intensive business paying for power just saw their operating costs shift unpredictably. China's play is elegant. By pressing Iran to de-escalate now before the Trump-Xi summit, Beijing accomplishes 3 things simultaneously. First, it stabilizes energy markets ahead of what will likely be contentious trade negotiations with Trump. Second, it positions itself as a stabilizing power in the Middle East, which matters for Belt and Road credibility and OPEC relationships. Third, and most critically, it removes a major geopolitical risk premium that's been baked into every financial forecast for the next quarter. But here's what nobody's talking about yet. This isn't just about oil prices. This is about China signaling to the United States that Beijing can manage regional volatility better than Washington can. When Xi and Trump sit down, China will point to this and say, "We kept Hormuz open. We kept energy flowing. We prevented a war." That's leverage in trade negotiations. For AI companies specifically, this matters because their entire unit economics depend on stable power costs. OpenAI, Meta, Google, all the companies racing to build trillion-parameter models, they've all locked in long-term power contracts assuming energy prices stay within a band. If Hormuz closes, even for 72 hours, those assumptions break. Spot prices spike. Regional grids get stressed. Data centers in the Middle East and India get rationed. And suddenly the timeline for deploying certain AI workloads gets pushed back. The contrarian take? China's pressure on Iran might actually fail. Iran has its own domestic politics. The hardliners there have incentives to escalate, especially if they think Trump is coming back and will be more hawkish. So even though Wang Yi delivered this message, Iran might ignore it. If that happens, the Hormuz risk comes back to the table fast. What to monitor over the next 72 hours? Iranian official statements about whether they'll accept the de-escalation pitch. Watch oil futures for any spike in volatility. Watch semiconductor and cloud compute pricing for any marginal increase in energy surcharges. And watch whether Trump mentions any of this when he confirms his Xi meeting. The reason to care right now is simple. Energy stability is infrastructure stability. Infrastructure stability is AI deployment stability. And AI deployment is where capital allocation is happening in 2026. China just made the first move in a 3-dimensional chess game between geopolitics, energy markets, and AI race timelines. That's worth watching. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next.